Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, January the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but it is Unenjoyment Friday. Unenjoyment Friday was what we used to call the non-farm payroll data day, which is the first Friday of every month that we got out today. So it is lovingly known as unenjoyment rather than unemployment. So non-farm payroll, actually hourly earnings, before we get to that, came out better than expected at 0.4%, expected to be 0.3%. We want wage inflation. If we're seeing inflation in the commodities and things that we've seen in the producer price index where they're starting to see prices go up, we need wage inflation so that people can actually pay for that. And we are seeing a little bit of an uptick there, which is good. On the downside, we did get non-farm payroll change at 156,000 hires versus 175,000 hires. A little bit worse than expected there. It does look like the revisions to last month's numbers went up a little bit, but unemployment also upticked slightly from 4.6% to the expected 4.7%. So that was in line with expectations, but unemployment rate did uptick a little bit. One thing I did want to mention is we've got a lot of these retailers struggling. As a matter of fact, Macy's said that they were going to cut 10,000 jobs and close like 68 stores. So not real good on the retail sector for them. That caused Macy's to really fall out of bed, which if you guys been watching, I did a strategy on the put calendars, and it's kind of an earnings setup. That trade moved my direction, but a little bit quicker than we would like to see, and at this point it's hurting a little bit. So those of you guys that saw that webinar and saw what I did, that's exactly what I was talking about. We want to see a slow movement down, but we don't want that massive spike down because it does have a tendency to create volatility in that front month, which we're short, and that's kind of what's happening there for those of you that are watching that. Anyway, on to crude oil. We've got crude oil up just slightly on the day, up 26 cents, but above that $54 a barrel area that I've been talking about. You know, with yesterday's rally, put us above the value area high, so green light to the upside there. Then on to gold. Gold giving back a little bit as crude oil commodities are moving higher. We're starting to see these ones that as crude oil is going higher, and equities are going higher, that's going to have a tendency to hurt gold, which is what we're seeing today. Everything's kind of really working out the way we would expect them, with the equities up as much as they are. And we've got gold down about $7 on the day, about half of yesterday's rally being taken back. Same with the bonds. Bonds down almost a point on the day. They were down closer. They were down, I think, almost a point earlier today. But again, went up, tested that 9-day moving average, and bounced away from it as the equities started rallying. As a matter of fact, off of the economic data, that unenjoyment number, the overall markets kind of fell out of bed there, and that's when the bonds were cruising higher. But as you can see here with the NASDAQ, it is pushing to the upside quite dramatically, up 50 ticks on the day, and has a new intraday historical high at 50,011. So put on your 5,000 hats. That is the milestone that I thought was going to take a little bit longer to achieve because so many people were expecting that today really pops up there and gets to that number quite nicely. E-mini S&P is up quite a bit today as well, up 12 points on the day, and has itself a historical day being up 12 points, but the high 2276. So new lifetime historical high for the E-mini S&Ps. And then this is the breakdown of the E-mini S&Ps right here, making those new highs as we speak on the highs of the day. So the overall market's just cruising higher. Then on to the trades that I've done. I talked about this yesterday. I had an arresting order for UAL, and I had on the January 80-70 put spread. So I was long the 80 puts, short the 70 puts. As a matter of fact, today you could have gotten it probably a little bit better than when I got out of it. But I originally paid $5.16. I covered that yesterday for $7.56. So right in line with my rules around that type of strategy. You can go to protraderstrategies.com, sign up for that, and check that out. And then on to NVDA. NVDA I covered this morning, and I had, a tickle in my throat. I had on a strangle in there, and it was the January 95-110 strangle. And I originally collected $2.22 for that. I was able to cover that today for $1.01. I was trying to cover that yesterday for, I think it was about $1.11, and was never hit on it. As a matter of fact, it kind of got away from me at the end of the day. I was trading around $1.40 by the end of the day. Today coming in, we got a little bit of that volatility coming off, and it being right there in the sweet spot with just about 15 days to go was set up just perfectly for that. So I covered that for my 50% of max profit on that one. Slightly better, but all intents and purposes, that's what I was shooting for, and that's what we're looking for in that kind of trade, all right? So today we're going to be doing a webinar later on this afternoon, right after the market closes, and we're going to be doing it on the collar. And the collar is a great way to protect yourself to the downside. It's really a sideways to bearish, if you will, but protects you to the downside for sure on that type of trade. All right, so that's all I got for you guys today. Check out that protraderstrategies.com. If you can't take that, take it easy.